Good Tuesday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with the main man. There he is, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for everyone to witness.
Yeah. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Perfect.
Let me share my screen. So today, if you guys have any questions, you could ask those questions two ways. One is to put your question on the live chat on YouTube. Will's watching it, he'll read it back to me. Excuse me. If you want to come on the show and ask your question live, we also put out a link to Zoom. Click on that link, it takes you over to Zoom. Once you get to Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera, but once you come on a show, everybody could hear you. You can ask your question live, kind of navigate us to where you're looking at. So those are two ways to ask questions. While we're waiting for questions to queue up, I'll start out taking a look at the pre-market report, see what's trading in the pre-market hours. And if any questions pop in, will let me know. We'll take those first.
Will do.
All right. So this is the pre-market report, and these are stocks trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Here I see 40 stocks made our percentage gainers list, 89 on the decliners. So right now, from that perspective, we're looking like a bearish bias at the open. I'm going to take this list and filter it out to just S&P 500 companies. To do that, we're going to use this filter here. So what we're trying to do is take out small cap stocks, closed-end funds, ETFs, leverage products, anything else that made that list, just to focus on S&P 500 companies. So I'm going to drop this filter here in ETF. I got a bunch of ETFs I could choose from. SPY is the S&P 500 ETF. When I select that, this list gets filtered for holdings that are in SPY, which are the S&P 500 constituents. In here, we see 5 made our percentage gainers list, 10 on the decliners. So again, from this perspective, we're looking more of a more bearish bias at the open. Couple things going on is tomorrow, right? Tomorrow is the interest rate decision by the Fed, and everybody's expecting 75 basis points. But also what to listen for is that they do give forward projections in a statement. So something that we'll be watching closely, because what they do is take all the other Fed officials who are making future projections, and they show you a chart, and then like the median target or terminal rate, if you will. So we'll see where they think that will be going forward. But that's tomorrow, correct, Will?
Yeah.
Let me see if there are no question. Another thing about, inflation really quickly to watch out for is, I've been hearing certain people talk about inflation while the housing has slowed down, sales in housing slowed down. Other things maybe have slowed down. And we have to remember that that's what the Fed's trying to do, but that's not real deflation, because deflation would be something where there's an oversupply and making prices go down. We're not seeing an oversupply. We're not seeing these Builders aren't overbuilding. If anything, they're scaling back at this point. And even though it's harder to move real estate, not as many buyers, I don't see the prices really coming down that much. It's not like there's a whole lot of real estate for sale at all these great discounts. And if you factor in higher mortgages, the cost of buying that home, if you're financing, has gone up, right? It's gone up in the last, whatever, 3 months, half a year, because mortgage rates continue to climb. And one thing, people are mentioning is that it's also harder for people to move. So if you're selling a house and you locked in a great mortgage or refinanced a great mortgage a year ago or 2 years ago, well, you can't take that with you, right? You sell the house, you got to pay back that loan. And then now if you're financing another house, now you're borrowing at a higher rate. So even in that situation, people who move or who want to sell are a little bit stuck there as well, because they're going to be forced to pay now higher financing costs. So what we're actually seeing, if describing that situation, is almost like a stagflation, right? We're like moving towards a stagflation where, inflation's still a problem, things are expensive, but there's a slowdown in economic activity. I mean, what are you seeing? Well, you follow real estate a lot.
Well, I mean, people are obviously worried about, interest rates now. I think 30 years close to 6%, right? And the prices of homes to sell them are going to have to come in to meet that new, borrowing rate. So everything you hear is that the real estate market is slowing and going down. Though I haven't seen it personally. That's certainly what you're hearing. I mean, we had the CEO last week on from Miami who was talking about it, and he was very bearish from what he's seeing from the housing market and the office rents. So it's definitely slowing down in that space.
Right. And when we look at, I'm just taking a look here where the earnings yield is right now on the S&P 500, 4.6%. So this is the earnings yield trailing 12 months, 4.6% in the S&P 500. That's compared to 10-year, we're around 3.5%, 2-year 4%. Today, we're going to get some other, tomorrow they're going to raise interest rates by 0.75%. That's the consensus, and they'll give us some forward-looking guidance. So we'll see where they think their terminal rate is. But a lot of people at inflation at 8%, right now seems like they still have room to move up. And another, I think, inflationary factor coming in, we talked about deglobalization, but it's the conflict, right? In periods of conflict, there's inflation. And historically, if there are wars, either military or economically, that creates inflation. And I feel like right now we're moving towards a Cold War, which is in a lot of ways an economic war, right? So it's a war behind the scenes where countries are trying to weaken each other's economies.
And that's certainly not going to bring down the costs, right?
That won't bring down the costs. And I think that, unfortunately, we're seeing that escalating right now with China, right? So with China could be a very big part, because now we got, Russia and Russia itself, we're not going to go in there and invade the country. They're not going to invade us here. It's really just a war of economics, a political war, social war, and that's going to play in. One benefactor we do get is that we're the reserve currency. So as people, during conflict run towards the dollar, we're raising interest rates running towards the dollar. That strengthens the dollar, that cushions a little bit of the blow because our purchasing power increases. So we do get that benefit. But I think that as this, economic war plays out, that's going to continue to create pressures on prices or on inflation.
We did just get some input from one of our chameleons who's a realtor, and she was saying that prices are real estate is slowing down, but the shortage, there's still a tremendous shortage of supply. So people are figuring out ways to buy, I guess, what's in the market. But Rob mentioned something interesting, which I didn't catch this morning. He's saying Ford reported a $1 billion increase in costs due to supply problems, i.e. inflation. Could be an issue for other manufacturers. Stock, I guess, is down 5% in the pre-market.
Which stock was it?
Ford, F.
Oh, Ford, right.
I think it's only a $14 stock, but it is one that is being talked about for its, move into EV and its technology, whether that's
right. So so a couple of things we mentioned here, I think that are interesting. We'll put the puzzle together. But before I do that, look at a yield of 4.6%. And if this 10-year goes to, and I think it could go to 4.6% as well, maybe even higher by the time that, they feel like they're putting things into equilibrium. So that would not make sense, right? You would not invest in risk assets that earnings are yielding 4.6% if you could just get it in the 10 years. So the only reason you would want to invest is that you think those earnings are going to be growing at an accelerated pace. And we see here, here net income, been growing by 13% year over year last year. But will this continue in an environment where we're seeing inflation, deglobalization, and higher interest rates? That's really that's what people are banking on now, that, well, if we see 10% growth in earnings year over year, then maybe it will make sense. But I think that's going to be a hard thing to accomplish in this environment, because what we're looking at is a very accommodative Fed, right? These numbers are coming from a very accommodative Fed, very easy money, loose money. There aren't these same geopolitical issues going on, like what we're seeing in the Ukraine. So I think that this is going to be under suspicion. We'll see going forward, but that will be hard to maintain those types of earnings growth in the current environment. Remember, we just raised cost of capital by a lot, and continue to do so. But here's an interesting, some of the things we mentioned, you guys, we mentioned Ford, EV, we mentioned, inflation, China here, and kind of just gets me to one of the thoughts I had was, and it's thesis trading, right? When you have when you do a trade, and you're looking at it, you want to form a thesis, put research behind it, and really be confident in that, in that trade, not just looking at a stock price and thinking, well, it got pushed up today. That means tomorrow somebody's going to pay me higher if I buy it. And one of the plays potentially going forward, that I was marking down is what can benefit from inflation, from potentially the economy growing, or maybe even if the economy contracts, there's still such an imbalance between the demand and supply that could keep pushing this trade higher. And, something that you have to read it, it's probably in the second, third page, of the Financial Times, and it's been grown, is that the lithium trade. And if you look at lithium right now, there is a big imbalance between the growing demand and the supply. I think lithium alone is up, something like 400%, but it's not the same as oil, where oil has the benefit of, decades and decades of investment in infrastructure, supply chains, monitoring systems and protection of these supply chains. So lithium is not like that. It's still pretty early on, and there aren't that many places, that I know. I think that right now, we mentioned China. I think China is the biggest producer of lithium, but they don't have the biggest reserves, but the biggest producers. So,
well, that's because it's a terrible process, I think, extracting these rare earths, right?
Yeah, and this could become an issue because the demand is climbing because it's considered a clean energy type of in electric vehicles. And lithium, by the way, it's not just EVs. They use them everywhere, cell phones and all this. The growth of those, lithium will benefit, right? Because it creates pressure and demand for lithium. And we could see maybe even Tesla, slow down or sell less, but the demand for the lithium will, I think, continue to grow, right? Because it's not just Tesla. It could be anybody creating these electric vehicles or anybody who needs this lithium. But Tesla obviously does use a lot of it.
Well, I don't know if you've read anything about people grabbing catalytic converters, but it's a real problem in our area. There was basically 12 buses in a bus yard. All the catalytic converters were stolen this past weekend in our area.
Really?
But you can't leave your car. They're being stolen. Catalytic converters are being grabbed at supermarkets, national parks, anywhere people park their cars, and they know they're going to be gone for 40 minutes. And the reason that the catalytic converters are desired is the rare earths inside the catalytic converters. So
yeah, and that market is really tight and it's opaque. It's not as developed as the oil. So we're going to see gyrations, but potentially big profit opportunities if you know how to navigate that. Again, you want to do your research, kind of research these companies. I think this one might be one of the bigger companies that deal with lithium. And here's one that was mentioned. Let me see. I was just looking at it.
Well, I think you can also look at Tesla, because I read recently Tesla's trying to get a license to mine in Texas.
Yeah, that potentially, Tesla, I think, here's one that, was mentioned here as a big miner in lithium. But the idea here is, let's say you do that research and you feel confident in that trade, is it yet crowded? Is it on the front news? Are these, stocks really getting, you want to maybe potentially be early in there. Of course, this has been in the news. People know about it, but it's not this big, it's not like the meme stocks or the.
Yeah, or it's also something you want to put on your radar if the market does go through a sell. If you think there's going to be a sell-off because of a recession or.
Right. Yeah, because I'm looking at these. I don't see, the implied volatilities here are subdued here, right? So it's not a bunch of people buying and speculating on upside or downside. The implied vols are kind of low. I'm looking at the open interest in this one. Not a lot, not a lot for. I'm saying maybe. Well, let's take a look. So, even for this stock, not a huge amount, but it doesn't look like a lot where there's people crowding into this trade. I think there's also lithium ETF. Is that
so? This is an interesting number about just because Google started pushing me catalytic converter information. In 2019, there were 3,900 catalytic converters stolen in the US. This is from an insurance group. Guess how many were stolen last year? So this is
from what 3,000?
it went from like basically 4,000. Guess what the number is this previous year, or so far this year into June?
I don't know, 15.
50,000.
Oh, 50. Wow. So shows you, yeah, that there's a real issue right now. You keep reading it, you know, that there's a demand, you know, demand is exploding. It continues to grow. And there isn't a lot of supply out there right now to fill that demand. And you've got it, like you said, it's not developed. These mining, you know, there aren't all these rules and clean ways of getting it out, and the places that they're getting it from are, you know,
Risky.
Exactly, very, very risky places. You know, obviously like China, then you got some South American, I think. I have to look again.
Yeah,
but
it's places where they look at the environment very differently than, you know, Europe or the US. And, you know, we've shipped all our, you know, bad stuff over to those countries. And it's now we need, you know, this, and it's been the big thing about the batteries, the big canary in the coal mine. And, you know, Swami has talked about this, and he shared a list of problems with the batteries, and it's long. You know, trying to create a battery is a very, very dirty business, and to try to create them and, you know, rechange the whole car market, it's going to be super interesting how it happens.
Yeah, which will add to the which if they start, you know, putting more rules around there, which you think they would, or even tariffs or whatever, that would add to the shortage of lithium. And here, this is LIT. So I think this is the ETF. And I guess there are 10 holdings in here right now from what I'm seeing. So you're right, Tesla is one of them. Here's SQM, ALB. So these are a couple big ones, obviously.
It's interesting. The other ones you mentioned actually had dividends. This ETF doesn't, you know, it's just costing you money.
Maybe a small one. But yeah, this doesn't have a big dividend. I think SQM might pay one, but you could see that a lot of these are outside the US, right? And here 14.5% is just ALB alone. So maybe going with the ETF is better, but here, you know, it has come off its high. But it is something that's interesting, where even in an environment where stocks may go down, you know, because of higher interest rates, the story here still is there is a supply demand imbalance, right? There's the demand continues to grow for EVs. You know, here in Europe, around the world, lithium is used in a lot of electronics. That continues to grow. So this is an interesting story how that one develops. And again, I'm just introducing that concept, something that does come up, you know, reoccurring, that shortages in lithium, prices in lithium going up. I forget where I saw the chart, but you do see this chart from 2020 to now, you know, big spike, and we're kind of still sitting up there. And right now, it's hard to see, you know, what would bring those prices down significantly. So we're right up at 925. Well, if there are no questions,
we did have a question from Michael McRae. It was actually, they brought up some good points about the VIX. Actually, a lot of the Chameleon seems to think the VIX is underpriced, and volatility is subdued relative to what's going on in the market. Maybe something we can look into later. But so Michael was asking about, and it's an options related question. That's why I just wanted to get to it. Is there a way to evaluate past Strangle performance on stocks with a defined delta?
on a straddle. So,
I think he said
to-
strangle, but
strangle. Straddle or strangle, the idea behind it is, if you do a perfect straddle or strangle, that the initial delta is zero, right? It's non-directional. So it's more of a volatility play. So if you did ideally, there is no delta in the initial. Of course, if you just let it go and not rehedge it, you're going to start getting a delta based on the direction it's going. The question is, do you hedge that delta and trade the volatility, or do you just let that straddle go to expiration and allow it to see if it moves enough to cover the cost of that straddle and go beyond? So I don't, as far as like a defined delta, I'm not sure, unless you're saying like, do I hedge it when it hits a certain delta? But I'm not sure why you would give a straddle a delta, because that's not what the strategy. If you're looking at a straddle or a strangle, the idea is it doesn't have a delta to it. When you do have a delta, then it's not, that's not a perfect straddle or strangle.
well, Michael, if you have any questions related to that, please email us. We can get it on tomorrow's show, or you can come in live and kind of walk us through what you were looking for there. Great show, Dima. Thanks a lot.
Yeah. And again, I'm trying to, I'm not sure the complete question because I can't ask it, but, there might be a different assumption in there. But yeah, if you do a straddle, the idea is initially you don't have a directional risk. You're neutral that way. You're buying kind of a movement or volatility.
Yeah, actually, Chameleons always brings interesting stuff every morning. Rob's letting us know lithium can be mined from seawater, but it takes 500,000 gallons of water to extract a ton. That comes per Google information, but that's amazing. That seems,
Yeah.
I mean, I know it's a lot.
That's
of
really
500,000 gallons. It doesn't seem like crazy amount to get a ton, but who knows?
Yeah.
Very interesting though.
Yeah. Yeah. I don't know. Yeah. It's interesting. Something to keep an eye out, because we are moving, right? Year after year, the demand for lithium keeps increasing, right? So if that continues and we don't see an equivalent amount of supply coming on there, it's going to pressure the prices.
100%. Actually, I heard this morning, actually, this is along with Rob's point about Ford and supply issues. They were saying Ford may start delivering the EVs without some of the needed chips for all the technology, because they can't get them with a IOU attached. So you can come back when the chips come in.
Oh, wow.
That doesn't seem like a great deal.
Yeah. Yeah. A lot of issues out there.
Yeah. Very interesting space. So tomorrow, maybe we can talk a little bit about the overall market volatility. There were some comments about VIX being higher. Lauren, I don't know if you want to shoot us an email why you think the VIX should be at least 30%, but it's just an interesting thought. I know Lauren brought us something interesting about the vol of I think it was Tesla last week. So I know he looks at a lot of the volatilities and is does a very good research on that. So that'd be interesting to know. All right, great job, D.
All right, thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Thanks, D. Trade in peace, community.